So today I will be giving a practical class on price action. When we talk about price action, we said price action is the study of raw price movement on a chart without relying on indicators. When we say is a price movement of a chart without relying on indicator, basically we are trying to say that by you studying all these movements, by you reading and studying all these movements without relying on indicators like the moving average. This is an example of indicator. This line that you are seeing here is an indicator. It's an indicator. But when trading price action, you don't rely on all these indicators. So this indicator is called a moving average. It's an indicator that I use in the market. Because before I enter any trade, I need to have like multiple confluence, like 1 to 5 confluence. The minimum confluence I get before entering a trade is 3. So I need to get like 3 different confirmations from different reading of the charts and my drawings. So the minimum confluence I get before entering any trade is 3. So if I get up to like 5 confluence, that means that trade is a trade that I have full confidence on. So but the minimum confluence I get when trading is 3. So but in the case whereby you are trading price action is a standalone strategy. You can decide to be trading the market today by using only price action. Price action is a standalone strategy, and at the same time you can decide to incorporate price action into your strategy. You can decide to incorporate price action into your strategy, and that is what I did. I incorporated price action into my strategy. But note that price action in the market is a standalone strategy. You can decide to be trading the market only by using price action. That's why they say price action, you don't rely on indicators or anything. You just study the raw price movement. You just study the raw price movement. So when we say price action is the action that the price, when we say price now, the action that the market forms is what we call price action. So the candlestick formation is the action there. The candlestick formation is the action. So there are people who just trade the markets by using only price action. So when we say you trading the market using only price action, you do not rely on any indicators. You just mark your level of support and resistance. Then you pay attention to market structure, candlestick behavior, and market psychology to make your trading decision while trading price action. But you don't rely on indicators. You just study the raw price movement. So today I'm going to show you how to incorporate this price action into the strategy that will be given to you. How to incorporate this price action on the strategy that I'm giving to you. So after marking your area of support and resistance, So after marking your area of support and resistance, so after marking your area of support and resistance, what the candle created on your support and resistance, what the candle created, the candlestick formation that the candle creates. Okay, the candlestick formation that the market creates on all these support and resistance area, on all this support and resistance area, the candlestick formation are what you need to pay attention to. So those movement there are the movement you need to pay attention to. Those are the price action where the market will create a candlestick movement, candlestick formation. So all these areas are the areas that you need to pay attention to, the kind of candle that the market will create. The kind of candle that the market will create. So those are the areas you need to pay attention to while incorporating price action strategy into this support and resistance strategy that I'm using. So for example, now when price break this structure, this higher high and came and created a higher low. As the market break this structure, the market came back and retested this structure. So you can see the structure are those area of interest where you mark your support and resistance. Area of interest where you mark your support and resistance. So the candle that the market forms in this place that will determine your entry are what we call price action. Those are the price action candles you need to pay attention to here before entering the market, before going for a buy. Those candlestick formation that the market creates here are what you need to be looking out for. The kind of candle that the market creates here are what you need to be looking at. So I will show you what I'm talking about on this example here. Let me use this example here and show you what I'm talking about. So you can see when the market, you can see this is a structure, and if you pay attention, you see that this is a W pattern that I have been telling you people. This is a W pattern. You can see this is a W pattern that I was telling you. I told you that when market creates a W pattern, which is also, sorry, this is head and shoulder pattern. This is head and shoulder pattern. You see. So I told you that whenever market creates head and shoulder pattern, the market is telling you what? That the market wants to reverse. The market wants to reverse. So you need to train your eyes on how to catch this movement. Because sometimes the market does not create this movement in a perfect shape. That is why you need to pay attention very well. Sometimes when the market comes to create a double top or a head and shoulder pattern, sometimes those patterns that are created are not created in a perfect shape, but Your experience is what to tell you that okay, that is the pattern that the market created. Sometimes you can see now this is an example of a double top. After price broke this place, this support that has now become a resistance, and the market came and retested this place and came back again and retested this place and continue going down. This is a double top. This is a double top. You can see this is a double top. You can see the end pattern. I'm telling you, this is a double top. So you see the way the market created the pattern. The market did not create the pattern so perfect that will make you to know that is a double top, which is an end pattern. So you see the way the market created it. So all those things are things that you need to be paying attention to. You should know that the market sometimes does not create those patterns in a well shaped way. But your experience in the market is what to tell you that that is the pattern that the market created in that place. So price action now, you can see when price now came to this place, you can see the action that the price created. You can see the action that the price created. You can see this bearish engulfing is the action that the price created. And whenever you see bearish engulfing on a support and resistance area, what is that telling you? It's telling you that the market wants to change direction. So as the market now break this structure, came back to retest this structure, you can see the market created what here? Doji. Created doji where? On area of support and resistance. You can see the action that the market created, the candlestick formation that the market created. So what is this telling you? It's telling you that whenever you see doji on a support and resistance area, what is it telling you? It's telling you that the market wants to do what? Want to either go down or go up. In the case whereby you see it on a resistance, it's telling you that the market wants to go down. You can see another candlestick. You can see another price action here. If you can only be understanding this thing that I'm saying if you actually read that manual, that candlestick trading Bible. You can see this candlestick formation here. You can see this candlestick formation here, a hammer, which is also known as pin bar. So you see, so if you actually read those manual very well, you can see when price came, created those candle where on area of support and resistance. So because I know how to spot my area of support and resistance, so you can see the way those candle, the candlestick formation is aligning perfectly on my support and resistance. Because why? I created my support. See, if you see that you mark area of support and resistance, and whenever price came to that area of support and resistance, price does not align with that your marking, then you should know that you did not mark that support and resistance well. So you can see all my markings. You can see you can see you can see so those candles that the market creates are what we call price action. So by me seeing a an engulfing candle here, what engulfing candle, what is an engulfing candle telling me? It's telling me that this market, a bearish engulfing candle, is telling me that this market wants to continue going down. This is price action. This is price action. This is price action. So if you did not diluted that manual on candlestick, then you will not be seeing all these things that I'm trying to explain. But if you diluted that manual very well, then as I'm explaining, we'll be on the same page. So you see, do all these candles that the market, all these candlestick formation are price action. Are price action. So you need to study those actions that the candle creates in order to make an informed trading decision. You need to study those actions that the candle creates. So you can see now, let me go to the current place that price is trading for you now to see. So you can see now, this is okay. Let me just use this live analysis as an example for you. What did you see here? Is this not a morning star formation? Sorry, evening star formation. This is evening star formation. And what did evening star formation told you on that book? And where is the evening star formation being formed? On area of support and resistance. You can see on area of support and resistance. So if you are following up, there was this current place was a place that I sent a signal, though I sent a yes, a signal, because yeah, I could remember I sent that signal, that I actually told you guys that if the price gets to TP2, delete the order. That buy limit order that I sent, that buy on GJ, GBP, JPY. So what did I see there that made me to send that signal? I saw the price action. This price, this is what I was paying attention to that day. Price now broke this level. So I was expecting an immediate retest on this place. That's why I actually use a limit order on that particular signal. I was expecting an immediate retest on this place, an immediate retest of this breakout. That was why I actually sent a limit order. I said we should use limit order. So, but the retest never came, and as price just broke this area, price just started going up because of the momentum that was in the market at that moment. Because of the momentum, the volume, trading volume did not allow the price to come back to this place to retest this place. There's what to call breakout and retest. Breakout and retest is what I trade. I need to get that retest is a confirmation. After price is retesting, then the candlestick formation that the price will create is what will make me to enter this trade, to enter the trade. So I actually sent the signal. I said what? Use a buy limit order. So we are expecting that price will come back to retest this place, but price never came back to retest this place. So we missed out on that trade, which is normal, which is okay. Which is okay. You can't catch every movement in the market, and market will not always play out your way. So using this live analysis now and giving you an example, you can see now. Look at the candlestick formation here. An evening star on what? On area of interest, support and resistance. Price came, rejected, and went back, and rejected above and came back. So sometimes where you see that you will actually enter a trade. See, you can't always win every trade in this market. So because now I know that some of you now will at this point here will want to buy this market. Yes, even me, I would have bought this market if I was trading this at that particular moment. I would have bought this market. Because why? Because I've seen a bullish engulfing. This is a bullish engulfing candle. I've seen a bullish engulfing. This is a bullish engulfing. And whenever you see a bullish engulfing on area of interest is what? You should know that the market, in the case of support, you should know that the market has rejected that area because this is a bullish engulfing. But why in another case I won't pay attention to that particular movement? Because why? Because right now the market is in a bearish movement. That is why I will not pay attention to this bullish engulfing. So you look for, in the case whereby your buyers, you place on your buyers based on the trend of the market. When you open a market and you analyze a market, you should know what you are looking for. By the time you see that the trend now, the market now is in an uptrend, then you should be looking for what? You should be looking for only buy. In the case whereby the market is on a downtrend, you should be looking for what? You should be looking for only selling. So in this case now, this market now is in a bearish movement. This market now is in a bearish movement. Look at the overall general chart. You see this market is on a bearish movement. So in this case, what am I looking for? I'm looking for only sell. This market is in a bearish movement. You can see this market is in a bearish movement. Because why? Look at the overall price trend movement. You can see price came, created lower high, created a higher low, created higher high, created another higher low, then came now and failed to create another higher high. Then the market now created equal high, and the market what? The market fell significantly to this area. Then the market rejected this area, and the price and the trend now changed again. The market start going up. The market start going up by creating higher high and higher lows, higher high and higher lows. So the market now came and took out what? This entry, this last high. But what? It was a fake out. It was a fake out. Then the market started doing what? Started coming down again. Started coming down again. So you can see this is the last lower high. Sorry, this is the last higher low that the market created. So the market came and broke the structure. This is where you know that this market is on a downtrend. This is where you know that the market is on a downtrend. Market came and break this structure again and continue going down. This is where you know that the market is on a downtrend. So the market consolidated, and break this structure again. But why? What you need to pay attention is that the market did not took out this high, this last structure, and the market rejected and start coming. And that's how you know that this market is in a bearish movement. And that's why you need to be looking for only sell. So by the time we get to the final, where I will give you the final strategy, I'm going to do a raw analysis. I'm going to do a fresh analysis. By the time I'll be giving you people the final strategy, then I'll be giving you my final strategy. I will show you how to identify if a market is on the uptrend, on a downtrend. So on that day, I'm going to do a raw analysis. But for now, we are talking about price action. Price action, the movement, the candles, candlestick formation. You need to study all those things because those are the things that you incorporate on the strategy that will make you to make an informed decision in the market. So I will give you the things I consider that will make me to either buy or sell, which is the confluence that I'm telling you. The confluence that I used to get before I either buy or sell. So you can see this movement now. This market did what? Because the market is on a downtrend, the market came and did what? And created a bearish engulfing. So bearish engulfing tells you what? That the market is going down. After created bearish engulfing, so you see the market start going down. Right now, like this now, this is how this trade is going to play out. This is how this trade is going to play out. So if in the case whereby we are buying this market, this is where we would have entered this market on this place. This is where we would have entered this market. our stop loss will be here, and our take profit will be last structure point. Our take profit will be on the last structure point that this market created. This is the last structure point. This is the last structure point. So our TP1 will be here, and our TP2 will be here, either here or here. So you see, our TP1 will be in this, no, our TP1 will be here, our TP2 will be here, the last structure, the last low. This is the last low on this current area. This is the last low on this current area. This is the last lower high. This is the last low that the market created. So there is a chance that if the market comes to this place, the market might not take out this last low. The market might not take out the last low. The market can come and just play out like this, because you place your area of support and your area of take profit and stop loss on structure points, on structure areas. So we'll still get to that one when I'm giving you the final strategy. I will show you guys how to place your take profit and stop loss. You need to place your take profit and stop loss in strategic areas. So this is it. So in the case whereby you are using take profit, this trade now will have like three take profit: take profit 1, take profit 2, and take profit 3. So the market might just come to this place and decide to just, and will not be able to take out this last structure, this structure point. The market might not be able to take out this structure. The market will just come and it might decide to bounce on this structure area and start going up. And anything that makes the market break this structure, then that means the market will get to this place. And anything that makes the market break this structure, that means the market will continue falling down. So that's why, but before taking any trade, you need to reanalyze the market, or on a fresh trading day, you do your analysis before entering the market. Like me, I do my analysis every morning by 4 a.m. I'm already awake. I'll do my pre-market opening analysis. But that's why, as a trader, you need to set out your trading plan. So me now, I normally do my analysis in the morning by 4 a.m. Sometimes by 3 a.m. I'm already awake doing my analysis, preparing for London session. Preparing for London session. So you see, and if I never take it, I have to reanalyze my market before taking any trade. I have to do my morning analysis before entering any market. That's why you see, if you notice that any day that you didn't see me send signal or anything, or I don't even, that means that day maybe I didn't do my morning analysis. And whenever I didn't do my pre-market uh, pre-session opening analysis, I do not trade for that day. I do not trade for that day. So you need to study all this movement in the market. So price action is the action that the market creates. All these movement are price action. All these things are price action. This is morning star. This is a price action. So why do I say it's a standalone strategy? Some people use that as a standalone strategy by not including any other things. They'll just draw their level of support and resistance, then just be looking for price action. That's why they say you want to rely on indicator. You won't rely on indicator. So this is a moving average. Moving average is one of the indicator I use. Moving average is one of the indicator I use. So I will show you how to use moving average. Moving average gives you potential area of support and resistance. So I will show you how I use moving average. I incorporate like one or two or three strategy and form the strategy that I'm using now. So I use price action as my entry strategy. That's where I use price action. If I'm looking for, if I want to enter the market, price action strategy is what I use. So after marking my area of support and resistance, I will just pay attention to the candlestick formation. I'll just go to either the 15 minute, the 5 minute, or the 30 minute, or sometimes even the 1 hour to look for my entry. So that in order for me to get an early entry in the market, so in order for me to get an early entry in the market, I have to go to lower time frames like the 5 minutes, 15 minutes, 30 minutes, and even the 1 hour, so that I can get a better entry into the market. I can get a better entry. So you see, right? If I intended to take this trade now, this is where I would have been entering this market in this place. Then my stop loss now will be here. So on that day, after I do a raw life analysis, I will still show you people how to go to lower time frame and look for a entry so that you get a better entry, you get a better area to enter the market, so that you get a better risk reward. So I will show you people how to do a raw analysis. How to do a raw analysis. So with this, we've come to the end of this class. Go and study your candlestick trading Bible. If you did see, you see, if you see that you are lost at this point of this course, that means you have not been reading those manual, reading to understand those everything that we've treated. That's why I always emphasize. I know why I'm always emphasizing ask question. That's why I'm always emphasizing ask question. You people did not know why I used to emphasize that. So we are beginning to come to the it's not we are already in the places whereby that question that I'm only emphasizing, ask question if you don't understand anything, will help you. So if you see that you are lost in this part of this course, that means you've not been reading those manuals. That's the truth. You've not been studying. I can only give you manual. I can't force you to study. I can only give you manual. I can't force you to study. If you know that you want to do this thing, then you should know that you're supposed to have been studying since. If you know that you want to become a trader and you want to do this thing, then you should know that, because you can't expect that a teacher is giving a lecture in school and you just feel relaxed. There are some lectures that if you did not start, you will never meet up. If you did not get, if you, it happens that you did not understand those classes on the early stage of that subject, you would never get it together. Trading is just like that. So, but the only luck now that you will have now is just that those now that have not been studying, or that will just open and glance through, and the only luck you have is just that my manuals are already uploaded and I have recordings. But it's just that you won't still meet up if you have not been studying, because why, we are already at the end of the course, because this course, we should be rounding up this course at, this is number 14, and tomorrow is number 15. Maybe tomorrow I might decide to do a lecture. I don't know how my schedule will be or how busy I will be. So I decide to drop the last lecture tomorrow. After dropping that last lecture, which is Fibonacci, and Fibonacci is even like a bonus lecture, I can decide to just end this course in this particular place, because I've already given you people everything. But Fibonacci is just like a bonus class on how to use Fibonacci to make an informed trading decision. Fibonacci is a tool. that you use. This is Fibonacci. This is Fibonacci. Fibonacci is a tool that you use to study to know when the market will retrace. That will help you to know when a particular market, a particular trend will retrace and continue and resume the original movement. So Fibonacci is a tool that will just help you to be spotting all those U-turns on that retracement. You can see the market now is on a downtrend. The market fell, and you can see the market retrace at this point. So Fibonacci is a tool that will help you to know where the market will retrace. And when the market now gets to all those Fibonacci retracement area, the market will have to create price action. So since price action, you will find price action everywhere, because even when the market gets to when the price gets to those Fibonacci areas, it's still the price action there that will tell you that the market wants to resume the trend. The market wants to resume the movement. The market wants to resume the movement. You can see the market is falling and the market retraced. This pullback, this is what we call retracement. When the market falls, that zigzag movement, that the price will just, that little trend that will just, the market moving in a zigzag form. So when market is on a downtrend, a market created a lower low and go to create lower high. That lower high that the market go to create is a retracement. It's what we call retracement. That's a pullback. You should know retracement by now. It has been there on those manual that you'll be reading. The retracement are there with diagram example for you to know what retracement is. Those pullback that the market will do is what we either call them pullback or you call them retracement. The market is pulling back or the market is retracing. So those are the two common languages you'll be hearing: pullback and retracement. So Fibonacci is just a tool that will help you. It's just that I didn't even know. I would have just even joined the two lectures so that I will know that we are done with this course. Then I will know that after this last lecture, I will know that then the last class I will do is where I will do raw analysis and give you the main strategy, how to incorporate all those things. That's the last class I will do, which is where I will give you the raw strategy, do a fresh analysis and be explaining and give you the raw strategy. So how to incorporate all those things that I've been explaining to make a trading decision, informed trading decision to either buy or sell. So I think Fibonacci, I will just do the class. I will try to see if I will do the class tomorrow, so that, because I want us to finish this course, because I need to even finish this course so that I can even focus very well on that challenge, because I've been busy. And again, the reason why we've not even taken any trade is because of the market condition. I have to study the market condition very well due to this war. The war actually changed the market condition, so I have to study this thing. So I can't just, because it's a challenge, because I've been taking other private trade on my own, but because it's a challenge, I need to make sure that, because I need to make sure that the trade that we are taking should be authentic trade, is a quality trade. And because of I've been busy doing other things too, so I need to even finish this course. We need to round up the course so that we'll even focus on the challenge. So I know before on the 15th, we'll finish this course before next week. What's today? Yes, we'll finish this course before next week. But so I think the last class I will do it on Sunday, so that I will do a fresh analysis on market opening. I'll do it on Sunday, so I will do analysis on market opening and give you that final strategy. Those things that all these lectures, and you incorporate it, all these things that I've teach you, I will incorporate it to give you the final strategy, the strategy I'm using. So before this week, we'll round up this course. Before this week or on Sunday. Since tomorrow is even the last topic is the number 15 topic, which after this one is the last topic, then we've already rounded up the course, giving you the raw strategy. I've already given you. See, by the time at this point, I've already even given you people everything. But it's just that I still want to show you strategy. I may decide to say, okay, the course has ended at this, because at this point I've already given everything. But me still giving you how to incorporate everything is just like a bonus class. It's just like a bonus class. So if you see that you've not been understanding anything, that means you've not been following up with this course. That's why I've been singing this thing ever since. I've been singing this thing ever since. Read, ask question, read, ask question. So we've come to the point. And now, after the course, I'll have to remove you guys from that group. I'll have to remove you guys from the group because I'm already preparing for the next people that I'm taking out. I've already, there's a badge now that will be coming after you people. So I have to remove you people from that group. So I've tried now, Abi. So we've come to the end of this class. Price action is just basically studying of raw price movement. Raw price movement by you studying the candlestick formation is what we call price action. You can see. Look at the action that the market created here. The action is telling you what the market is going down. Look at it. The market has started going down. The market has started going down. So if you still have any question, you can continue asking your question.